Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, today's date, Thursday, May 15th, 2014. The markets are taking a beating today, and the warning signs were out there. If you watched my last few videos the last couple days, you knew exactly what we were looking at and why there were warning signs out there. I'm going to go through it one more time today because I think it's that important. And again, just take a look at the charts here. So basically what happened is you had a couple upsloping trend lines, one from here up, and one connecting this pivot high and this pivot high. And if you looked at the chart on Monday, we broke above that level and closed above. That was a small bullish sign, but you needed to see follow through to solidify it. And what we saw here, if we zoom in a little bit, the next day on Tuesday, we moved up early and then failed and just hovered right above those two lines. And again, the upsloping line going here and here. And what I said to members is, listen, this is a very weak showing. First of all, you got a bearish pattern right here, downward move inside bar action, plus you keep on hammering on these lines. See it hit it right here, 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 and even touch the lower point there before closing just on top of these lines. That was concerning to me, and it should have been concerning to anyone reading the charts. Because if you have a good, strong breakout day, you need to see follow-through, and we did not see that. The markets basically ended flat on the day. Yesterday was the key indicator that broke the camel's back, the key straw. You gapped below both those lines. And again, it's hard, and this probably to most people who don't understand charts is kind of a little obscure, but it's actually insanely important. Notice how you had these two upsloping trend lines, and notice how you never closed below either one of them the whole day on Tuesday, even though you hammered on it. But then looking on Wednesday, we gapped below. That's called a river theory. And a river theory is a proprietary signal, and it's a great signal. It's a very bearish signal in this case. And notice how you sold off and then went sideways for the next 3 hours, 4 hours. What kind of pattern is that? You have a river theory, which is bearish. Then you have this sideways consolidation. It's known as a bear flag. So you basically have a bearish signal upon bearish signal here, and that's ultimately telling you you're going to break down. We saw the writing on the wall. The markets collapsed into the end of the day, stalled right on the 200, and then look at this. They closed above the 200 and above this little area of support here, and if I zoom out, you can see it's a gap window pivot high. That's what that support line was there right there. And then what happens today? Another river theory. 2 in a row, 2 days in a row. Epic. And again, river theories, you guys should know if you've taken my Elite Keys to Unlimited Success webinar. Basically, it tells you that you're going to see more downside in this case. Now, river theory could happen to the upside as well, in which case it's a bullish signal. But in this case, where it's gapping below major levels, it is obviously telling you the market wants to go lower. And a river theory is extremely bearish in this case. And you can see the collapse on the markets. We put in a little bit of a pivot low right here, and we're trying to bounce off of it, but we're still down pretty precipitously on the day. Notice where the market's kind of stalling, right in this area. So there's a lot of, see the pivot low, pierce, pivot low, pivot low. That's what we're holding right now. Now, again, if we go sideways the rest of the day, we could be setting up for more downside tomorrow. Now, what's driving this market down? Honestly, I think it's interest rates. Interest rates are collapsing. The dollar-yen is collapsing, which is a huge impact on this market. But again, everyone's getting scared because interest rates are dropping, and it's counterintuitive. Most people would have thought interest rates would be going up as the Fed withdraws the printing of money. But it's not correct. Why? Well, basically, you have a scenario here, guys, where the bond market knows that the economy is not growing. All right, we had 0.1% growth in GDP first quarter. Everyone blamed it on the weather. Doesn't matter. All right, yeah, you might get 1% in the second quarter, maybe 1.5%, but that's not growth, folks. That is barely keeping pace with the status quo, right? It's the flat line. And the bond market is telling us. So the Fed is saying, the Fed's been talking out of one side of their mouth. They've been saying, oh, we're going to withdraw $10 billion every month because the economy seems to be growing. We're doing better. Everything's going well. The bond market's saying, no, it's not. And honestly, who's telling the truth? I think we all know, the bond market. So, the writing's on the wall. It looks to me like we have a path of not declining growth, not like shrinking and negative growth, but probably we're going to be in a Japan-like scenario of flattish growth for years to come. And the scary thing about it is that that's with the stimulus, the $4 trillion in stimulus that the Fed pumped into the market. I mean, that's scary that they printed all that money and this is the best growth we've had. I mean, that's it. What we've got, we've got. And the markets obviously are reeling from that. David Tepper made some comments. He basically said you don't want to be long, you don't want to be short this market, which to me, this is Tepper speak. And this is, remember, these big hedge fund guys, they're not going to come out and say short the market because they'll hurt the market and they are aware of that. So if a guy like David Tepper is going to say, he's short the market, he's going to say, oh, well, it looks like the markets are kind of full valued here. If you ever hear the term full valuation, that means the hedge fund guys are short. And whoever's saying that, they're short. All right, they don't want to say they're short straight up, especially big boys like David Tepper. But when he says, oh, I'm not long anymore and I'm not short, we're kind of just treading water. We just believe it's a neutral market here. That means he's short, and now he can finally say it so everyone else sells, and then the markets come in and he makes lots of money. I mean, this is very simple stuff. Right? It's walking a fine line, and he's able to do that by saying that. Okay. In any case, small positive, the market intraday has achieved a little bit of a break of the 20 and confirmed above. You just got your retrace. If you know the confirmation method, that was a buy right there for a quick bounce, and you're getting that bounce on the spiders. And again, these are proprietary methods we teach here at InTheMoneyStocks.com. It's interesting today because there's a lot of running from all avenues of stocks. So we're seeing the Dow down about 190 right now, NASDAQ down 39.5, and the S&P down about 21. And what I think is so interesting about today is in the past when the markets decline, we're seeing stocks like Chevron and Exxon and DuPont actually rally higher while the tech sector sells off. Today is different. You're seeing it wide range. In fact, take a look at Chevron today, guys. Look at this. Chevron's down over 2%. In fact, Chevron is leading the charge. Now, I'm short Chevron, and I'm in the money with Research Center members. Okay, so that's good. What else is getting hammered that's a safety stock? DuPont. Look at DuPont. Down $1.11. That's a big drop on DuPont. Notice this trend line right here. Look at that bounce right there for an intraday scalp. Just sick levels here, guys. So much money to be made day trading if you know what you're doing. And again, DuPont, I'm short. Net short here, obviously, and doing well there as well. We can also take a look at other stocks out there. Hewlett-Packard's taking a beating today. The transport's down. Transport's actually doing a little bit better. You can see they've recovered off their lows, but a nice fall on the transports as well. JP Morgan Chase, nice drop there, down 82 cents, 1.5%. Goldman Sachs, beautiful little sell-off near the lows, down over $3. So it's a broad-based sell-off today. All right. In fact, the NASDAQ is probably doing a little bit better. As you can see, Cisco actually reported earnings yesterday, which were pretty good, and that stock is actually up almost 7%, so nice move on Cisco. But today, again, another stock that disappointed, Walmart. Walmart, bad earnings, not good stuff there. They blamed the weather, but the stock is still taking a beating, and again, decidedly so. I mean, it should be taking a beating after those earnings. All right, so again, if you look at interest rates, guys, now this is ultimately could be good for housing that interest rates are coming down. And interest rates right now in the 10-year, the yield is 2.5. Could help the housing market, but again, it's not a good sign for the economy. And that's what the end game is here, folks, as we kind of wrap the video up. And keep that in mind. So let's go back to the spiders. And again, spiders achieved a move above the 20 intraday here. But the question is, can they hold it? Can they make a bullish consolidation, maybe break to the upside a little bit? I think today's going to be a nice down day across the board. The question is, how much is it going to be down? Right now, the S&P down about 1% on the day, and we'll watch to see where it all ends. All right, guys. On that note, I am going to bid you farewell. And again, come join us here at InTheMoneyStocks.com. Take the 7-day free trial. 7-day free trial to the Research Center. That's where you want to belong. So remember, the Research Center. Research Center is where you want to be. That's for swing traders and investors. You get live swing trade alerts. Again, 6 swing trades. Yesterday we closed out WHR. By the way, yesterday I shorted with the Research Center members Berkshire Hathaway. And look at this, already up over $1 on the trade. We shorted it up here before the fall yesterday, and look at that drop already. So again, just got to be able to read the charts. If I just go to the simple chart here, all right, look at this. 3-bar surge, inside bar pattern. That's a bearish flag. We shorted it yesterday, getting the daily chart to drop nicely. And again, a nice dollar in the money plus already on Berkshire Hathaway, the B shares there. And by the way, I think that's going to go much, much lower. But in the short term, it's a nice gain, and I'll take it for now and continue to hold the position. All right, guys. Again, come join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Join the pros. Profit for life.